Bad or no bookkeeping is costing you money every day. Most business owners think bad bookkeeping just means a stressful tax season, a few extra hours digging through receipts, a bigger accountant bill, maybe a late filing, annoying, but really not a big deal, right? Well, wrong. Bad bookkeeping isn't just an inconvenience. It's an active drain on your business. It costs you money in ways that are quiet, invisible, and compounding. And most business owners have no idea that it's happening until the damage is already done. Today, I'm going to walk you through 5 specific signs that your bookkeeping or lack of it is literally costing you money right now. And I'll tell you exactly what to do about each one. Even if these sound familiar, this video is going to be worth a lot more than the time it takes to watch it. Let's get into it. Before we get into the signs, I want to reframe how you think about bookkeeping for just a second. Most business owners think bookkeeping as a record-keeping task, something you do just for the IRS, a box you check so your accountant has something to work with in April every year. But bookkeeping is actually a decision support system. When it's working, it tells you where your money is, where it's going, where it's leaking. When it's broken or missing entirely, you lose that visibility. And invisible problems don't stay small, they grow. Okay, let's get into the signs. If you sit down with your accountant every spring and the number they give you is a shock, either much higher than you expected or an unexpectedly large refund, that's a bookkeeping problem. And here's why. A surprise tax bill means one of two things. Either your income was higher than you realized, which means your books weren't giving you an accurate picture of your profitability through the year, or you missed deductions, expenses you paid that never got recorded properly, so your accountant couldn't claim them. Both of those are bookkeeping failures, and both of them are costing you money. A surprise refund sounds like good news, but it's actually not. It means you overpaid the government throughout the year and gave them an interest-free loan with your own cash. That money could have been working in your business, covering expenses, paying down debt, or sitting in a reserve account earning you interest. The fix is estimated tax planning, knowing throughout the year roughly what you'll owe so you can be prepared for it. But that only works when your books are current and accurate. If your financials are 3 months behind, you're flying blind on your tax position every single quarter. Business owners with clean, current books aren't surprised at tax time. They already know what's coming, and they've planned for it. What this costs you: unexpected tax bills that strain your cash flow, missed deductions you'll never get back, overpayments that drain your working capital. Quick question. Of everything your business sells, every service you offer, every product you carry, every type of client you work with, which one is the most profitable? Not which one brings in the most revenue, which one makes you the most money after you account for the time, materials, overhead, and effort it takes to deliver all of it. If you hesitated on that answer, or if you genuinely don't know, that's a sign your bookkeeping isn't giving you the information you need to run your business strategically. This matters more than most people even realize. A lot of business owners are unknowingly spending the majority of their time and resources on their least profitable work. They keep doing it because the revenue looks good at the top level. But when you break it down by service, client type, by job category, the margins tell a very different story. Proper bookkeeping set up with the right chart of accounts and job costing can show you exactly where your profit is actually coming from. That information can completely change how you price, how you sell, and where you focus your time and energy. Some business owners have cut entire service lines after seeing this data and made more money with less work. Others have doubled down on a small segment of their business that was quietly carrying everything else. You can't make those decisions without the proper numbers, and the numbers only exist if the books are in order. What this costs you: time and resources spent on low margin work, missed opportunity to scale what's actually working, pricing that's based on a gut feeling instead of reality. If you've ever been turned down for a business loan, a line of credit, or any kind of financing, or you've avoided applying because you knew your financials were a complete mess, your bookkeeping is costing you access to capital. And access to capital is one of the most valuable things a growing business can have. We've talked about it in previous videos, how lenders evaluate your business. They look at your tax returns, your profit and loss statements, your balance sheet and cash flow statement. They want to see 2 or even 3 years of clean, consistent, well-organized financials. When those documents don't exist, or when they're incomplete, inconsistent, or thrown together at the last minute, lenders have no choice but to view your business as a risk. Not because you're a bad business, but because they can't clearly see enough to make a confident decision. And it's not just about getting approved. It's about the terms you get. Business owners with clean financials qualify for better interest rates, higher credit limits, and more flexible repayment terms. Business owners without them, if they get approved at all, pay more every dollar than what they borrow. There's also a subtler cost. If you've been avoiding the loan application process because you know your books aren't ready, think about what that's meant for your business. The equipment that you didn't buy, the location that you didn't open, the contract you couldn't fulfill because you didn't have the capital to do it. Every one of those missed opportunities has a real dollar value. What this costs you: loan denials or worse terms, higher interest rates, missed growth opportunities that required capital you couldn't access. This one is almost universal, and it might be the most quietly expensive sign on the list. When was the last time you actually looked at every recurring charge hitting your business bank account or credit card? Software subscriptions you signed up for 2 years ago and never used, a membership that auto-renewed at a higher rate, a service you meant to cancel after a free trial, a vendor you switched away from that's still quietly charging you every month. These changes don't announce themselves. They just sit there month after month, draining your account. And if nobody is regularly reconciling your books, matching every transaction to a known expense, they can go undetected for months, sometimes even years. I've seen business owners discover hundreds of dollars in a month charges that they had completely forgotten about. Multiply that by 12 months and you're looking at thousands of dollars every year, straight out of your profit. This is one of the most tangible, immediate benefits of regular bookkeeping. When your books are reconciled monthly, every single transaction gets looked at. Forgotten subscriptions get caught. Duplicate charges get flagged. Billing errors get disputed and refunded. Clean books aren't just about knowing your numbers. They're about protecting your money from the quiet leaks that nobody else is going to catch for you. What this costs you: recurring charges for unused services, often hundreds or thousands of dollars per year that disappear with zero value in return. This is the sign that I think and the most dangerous and the most common. Tell me if this one sounds familiar. You check the bank account. There's money in there, so you feel okay. You go check it again a few weeks later. Less money, but still okay. Then one day you look and the number is uncomfortably low, and you're not entirely sure what really even happened. That is a bank balance management issue. And if that's the financial equivalent of driving by looking in the rearview mirror. The bank balance tells you what it's been. It doesn't tell you anything about what's coming up. It doesn't tell you that you have an $18,000 outstanding invoice that may or may not get paid this month. It doesn't tell you that a $12,000 quarterly tax payment is due in 3 weeks. It doesn't tell you that your biggest client's contract ends next month and you haven't lined up a replacement. All of those things are happening whether you can see them or not. Business owners who run on a bank balance thinking are constantly being reactive. Every cash crunch is a surprise. Every big expense feels like a crisis. Every slow month is an emergency. Business owners with current, accurate books can see forward. They know what's owed to them and when. They know what's coming out and when. They can build a simple cash flow forecast, like we've talked about in previous video. And they see potential problems 4 to 6 weeks before they hit. That visibility changes everything. It changes how you spend, how you hire, whether you take on a new client or wait a bit, whether you invest in equipment now or in Q3, whether you draw from the business this month or leave cash in it to cover what's coming. Every one of those decisions is better when it's made with real information. And real information only comes from when books are current, accurate, and actually being looked at. What this costs you: poor timing on spending decisions, cash flow crises that could have been predicted and avoided, a constant low-grade financial anxiety that drains your focus and energy. If you noticed a pattern across all 5 of those signs, you're right, there is one. Every single one of them comes down to the same thing: visibility. When your books are clean and current, you can see your business clearly. You know what's profitable. You know what's coming. You know what you're spending. You know what you've earned and what you haven't collected yet. You can show that picture to a lender and get financed. You can show it to yourself and make better decisions. When your books are behind, incomplete, or non-existent, you lose that visibility and you pay for it in missed deductions, bad decisions, poor loan terms, wasted spend, and a constant sense that you're never quite sure where things stand. Bookkeeping isn't just about staying organized, it's about staying in control. So what do you actually do with this? First, be honest with yourself to where you are. How many of those 5 signs hit close to home? 1, 3, all 5? There's no shame in it. Most business owners are dealing with at least 2 or 3 of them. Second, if your books are behind, start there. Even getting caught up on the last few months will give you a clearer picture of what you have right now. QuickBooks makes it manageable even if you've been avoiding it. And if you'd rather have a professional handle it, that's exactly what a bookkeeper is for. Third, commit to looking at your numbers monthly, not just the bank account, your P&L, your cash flow, your receivables. 15 to 30 minutes a month consistently will tell you more about your business than most owners ever know. The businesses that thrive aren't necessarily the ones with the biggest revenue or the smartest owners. They're the ones that know their numbers and use them. If this video opened your eyes to ways your bookkeeping might be quietly costing you money, please share it with another business owner or someone who else needs to hear it. This is the kind of thing that people don't figure out until something goes wrong. And I'd rather you hear it now. If you want help getting your books in order and keeping them that way, check out the link in the description. We work with small businesses to get them financial clarity that they need to grow. Like and subscribe for more small business finance content every week. And drop a comment below. Which of these 5 signs hit closest to home for you? I read every comment and I genuinely would love to know. And if you do need help with your bookkeeping, I am a certified QuickBooks ProAdvisor and I can help. We'll see you in the next one.